what's your emotional response that happens when you start going into loss or when you're risking higher amounts of money, right? And we all have levels which we're like, I can handle that kind of loss. And then we have other levels where if our trades start to sink into a loss, we're just like, what am I doing? That's too much, right? And so the first thing you always want to decide if you're doing like a multi-day scale in, scale out strategy is how much loss can you handle watching if the market dips below your entry point, right? And most of us have a number. It's okay to push the envelope a little bit, but if you're pushing it so much that you're freaking out and getting out of perfectly good trades just because you can't handle it going into a little bit of a loss, then you're probably trading too high or too high of a leverage, right? So that's the first thing you want to notice if you're scaling in and out of trades. But the reason to think about scaling in and scaling out is because generally you don't want to get into a high leverage trade unless you've already got a trade open that's in profit and that you've already moved the stop loss up, right? So generally when you're scaling in and out of trades, you're not necessarily taking profit at the very first pattern you hit, right? Like, so let's say there's let me share my screen. Sorry, this is where I do want to share my screen. So let's look at, there's me on YouTube. I was checking the comments. Let's go on the hourly. So numerous patterns marked out here. Okay, so let's say we were in this pattern. We saw the breakdown. We bounced off this, right? So let's say we caught this bounce as a trade. Okay, so we're already scaling in. We know if we cross over this triangle and there's a breakout here, that it's likely to go up, at least to this resistance zone, which is really what we saw, right? So you saw a lot of traders, like Carl on the Moon was one of them. I think Chris might have talked about this, Crypto, I can't remember for sure. But a lot of traders were opening trades at these bounces. And then once we clear other major support resistance areas, you can add to that trade, right? But when we hit this point, there's the moment of doubt and uncertainty, right? Are we going to go higher or should I take profit, right? And so there's this debate you have to do internally, because if I leave the trade open and can add to it here, not only can I add to it, but I can scale up leverage and possibly get into a really, really huge trade. The challenge with doing this mindset is you can turn a whole lot of winning trades into losing trades really rapidly. Because if you're in a wick out or something like this, like it's just a little wick up, and you've scaled in and upped your leverage, and all of a sudden the market turns around, all of a sudden this winning trade just turned into a losing trade, right? So how do you mitigate that? Well, it's a good idea to actually run the numbers and do the math, right? And have a specific strategy in mind. Personally, when we're in a zone like this, where there's a ton of support and resistance, overhead, underhead, etc., right? I wouldn't be doing a huge amount of trying to hold trades open and keep them into multi-day trades. Like, for example, I did take profit as soon as we hit this resistance zone because I knew we were probably going to run into it, right? And then I added a little bit more to the trade here, managed to trade it up here, right? So if you're keeping these trades open multi-day, it's good to have a percentage in mind. When I hit these targets, how much of the trade am I taking out? And then when I scale up, how much more am I adding back in? Okay. Now, the thing to remember is the minute that you scale out of a trade, it's going to average up your entry price. Or sorry, the minute you scale into a trade, it's averaging up your entry price, right? So let's say you entered here, traded up to here, and now you're adding a little bit more here. If you add the same amount you started with here, it's now going to have the distance, and now your entry price is up here. So now what was a highly profitable trade is only a semi-profitable trade, right? So I normally use, depending on the level of resistance in the area I'm dealing with, a percentage approach. So when I hit the target, if I'm planning to keep the trade open, I often only take 20% profit. So when I come up here, because it's going to average down, if I've taken half out here and it averages down, then my entry point actually is only going to be just below this level. Whereas if I only take 20% out, my entry point is going to be a lot lower. So this is a good strategy to test and try different approaches too. So for example, if you start with a 5% leverage here, you might be able to scale into a 12% or 15% leverage up here, right? But normally you want to have enough space in the trade that you're not bringing your stop loss up to the point that you're taking away all your winnings if the trade turns around the other way, right? So you want to make sure you're using some approach. In this kind of an area where, you know, we're kind of expecting that this is going to be a tough area to get through. So there's going to be a lot of up and a lot of down and a lot of up and a lot of down. Personally, in a zone like this, I only do a little bit of scaling in and out, right? In other words, small percentages. And then, you know, when I got up here, I literally closed out my trades because I figured, you know, let it come back down. Let me place another long. I'm not confident enough in this short because it's not clear what the market's doing right now, as far as I'm concerned. I mean, it's very short-term bullish, but I'm not trading on such a tight time horizon as some traders, right? When we get through an area of resistance like this, though, we can expect, like, you know, it's looking strongly like we're creating an upward trending wedge here, right? When we break through this zone, we're probably going to see really big price movements at that point. So this is going to be a good zone. Like, we're going to hit some resistance up here. We're going to hit some resistance at the fib levels. But once we're through this area of major resistance, scaling in and scaling out is going to get a lot easier. So if you're wanting to keep multi-day trades open, I would always take profit when you hit the major targets, but take less. And then move your stop loss up a little bit, you know, keep your trade in profit as you're adding in.
When you say the major targets, you're talking about the Fibonacci resistance levels, not the actual
either the fib levels or the target of the pattern. So let's say this upward rising wedge breaks out, right? So we could actually do a measured move. Whoops. Let me pull that line up here. So let's say we're getting up here and this wedge is playing out and we have a breakout up here and we've got a measured target here, right? But we've got this major area of resistance here. So we're thinking the market might turn around at this point, right? And often we've got a pattern within a pattern, right? So for example, we might have a smaller wedge that's breaking out and its target's here, but there's also the target of the bigger wedge that's breaking out up here. So we're not sure if the bigger pattern's going to play out or the smaller pattern's going to play out. So we might take profit at the smaller pattern. When it breaks through that area, we might then add back to the trade and scale up the leverage. I wouldn't do this in huge increments, though, is the point, because it's easy to get wrecked doing this in huge increments. So practice this with smaller increments and smaller increases in leverage till you start to understand how the market's performing and how this strategy works for you. And then you can create a rule book for yourself for how to do this effectively. Is that making sense?
Talking about rule books, we had Joaquin has asked the question, do we keep a trading journal? And he would like an example because he's thinking about doing one. So we'll get that ready for you for the next live stream we do next week, because we need some preparation time for that.
Yeah, that's a great question. The answer is absolutely yes. And we can talk about that more next time. Yeah.
Yeah, we also take journals of how were we feeling, you know, was it a sunny day? You know, sometimes I'll write down how I was feeling because of what I ate. So I know that, you know, if there's a pattern forming, that if I eat something versus something else and it makes me feel crap and then I make a really bad decision, if there's patterns there, then I can adjust my patterns of behavior.
Yeah. And
so the bottom
when
line
I lose a trade, I always make a record of, was it FUD or FOMO that had me, like, did I enter poorly because of FOMO, or did I move my stop loss up too quickly in FUD? Sometimes you just can't predict the market, like, because you don't know that Elon Musk is about to put a tweet out that turns the market around. So sometimes a perfectly good trade just goes south. But sometimes it's, you didn't enter powerfully, you tried to jump on a moving train because you had FOMO, or you moved your stop loss up too quickly because you had FUD and you didn't want to turn a winning trade into a losing trade. But I always make a record of those things, and I start to look at what are my patterns if I do have a sequence of losing trades, so that I can stop. One of my personal rules is when I do lose a trade, I don't trade again for 24 hours. Because one of my patterns, and everybody has different patterns, but one of my patterns is when I'm in a losing trade, afterward, I tend to make bad decisions. That's my personal psychology, right? So I make sure I give myself enough space and window. I don't do the get right back up on the horse if you fall off. For me, that's a scenario for losing more money. So I make sure I take a time out and come back to the market later. Thanks for joining us here on Conscious Crypto Traders. Don't forget to give us a blue thumbs up, hit the subscribe button, click the notification bell, and select all. We do accept donations on Conscious Crypto Traders, which we put into infrastructure development for our community here in Costa Rica. We pave roads and do other infrastructure projects. We also run a bi-monthly mastermind call for people who are interested in helping us dive into research on different scenarios that affect the price action on Bitcoin. If you're interested in joining this mastermind, please reach out. We'd love to see you join the group. And until next time, trade consciously.